Okay, guys, so we have a trading opportunity for the South African rand against the Japanese yen in the markets, and we are seeing the rand pushing higher against the yen as it's making a recovery from the early losses incurred in the early parts of the year when we had the sell-off from the coronavirus pandemic. Now, let's just remember why this happened. Remember, the Japanese yen is a safe haven currency that always appreciates in times of uncertainty, and this is because Japan's positive current account balance going over many decades means that Japan is seen as a very credit-worthy place to invest your money when there's stock markets selling off and investors take their money and they buy Japanese government bonds as a safe place to park their cash. Now, why is it a safe place? Because Japan exports 713 billion worth of goods and services to the rest of the world, and they import 653 billion. So there's a positive balance of payments. So more money is coming into the country and then comes out of the country. And then that money that's left over gets invested around the rest of the world. So Japan always has a positive flow of money coming into the country. And this basically means that the risk of the Japanese government not repaying their debts is very slim because they always have this surplus of revenue that they can draw on in terms of raising taxes, so on and so forth. So that is a big part of why Japan is a safe haven currency. So when we saw the South African rand get really weak, and we must remember why the South African rand got really weak, because South Africa is an emerging market country that borrowed a lot of its money in US dollars. And then once the stock market started to crash, everyone wanted to own US dollars because it's the world's reserve currency. So money flowed away from the South African rand back into the US dollar, for an example. And that meant that rest of world reserves of the rand was probably increasing when you took the balance of payments from their imports and exports into account as well. And that basically means that the rand was in less demand, the currency was getting weaker across the markets, and we saw a nasty sell-off in the rand across the markets as well. South Africa probably borrows a lot of their money in Japanese yen as well, as Japanese yen is one of the most traded currencies alongside the US dollar, alongside the Great British Pound, alongside the euro. And that meant that the flow of money coming out of South Africa back into Japan caused this nasty sell-off in the first part of the year. But we're now getting a strong recovery, and we're seeing the South African rand really make back some of the room lost from the early parts of the year. And we do have around, from the price that we are at now, we do have around 10, 12% till the South African rand claws back its previous losses. Now, the most important thing we must pay attention to is the interest rate differentials between Japan and South Africa. Because remember, if I'm buying the South African rand against the Japanese yen, I have to first own the yen and I sell my yen in exchange to buy the South African rand. And then the difference in interest rates between the two country central banks means that I'm going to be receiving interest on the amount of rands that I purchase, and I'll be paying out interest on the amount of yen that I borrowed as the financing currency to purchase the South African rand. So remember, when you're looking at a country, you have a deposit rate and you have a lending rate. So when you buy a currency, you receive the deposit rate of interest set by the central bank, and when you borrow a currency, you pay the lending rate. So when I'm buying the South African rand against the Japanese yen, I'm borrowing the yen and I'm being charged the lending rate, which at the moment is minus 0.12. And when I buy the South African rand, I receive the deposit rate, which is 3% and 52. So 3.52% interest over 365 days over a 1 year annual period. So clearly I get paid by the Japanese central bank to actually borrow money. Why are they paying you to borrow money? They're actually paying you to borrow money because they don't want people saving money. They want people to spend money in the economy because Japan has low inflation. It's nowhere near their target. So they've set interest rates at a negative to encourage spending, borrowing, to try to drive up growth inflation to hit their target. So if I borrow the Japanese yen to purchase the South African rand, I get paid 0.12% interest on the Japanese yen that I borrow. And then when I buy the rand, I'm also receiving 3.52% interest. So overall, I'm receiving 3.64%. And if I went long and I bought one lot of this currency pair, I'll be receiving into my trading account 3,640 rands. And if I was to go short the currency pair, I'll be paying out 3,640 rands. Because again, remember, if I buy the yen, I'm not getting paid any interest on the yen. I'm actually having to pay interest to buy the Japanese yen, and then I'm being charged interest for borrowing this currency because that's the lending rate. So clearly it's profitable to buy the South African rand over the Japanese yen, because if I buy the yen against the South African rand, I'm losing money overnight. Automatically, I'm paying out 3.64% annually. On a daily basis, that works out. I'm paying out 10 yen, 10 yen and 55 cents per day. For an example, if I buy the currency pair, I'm getting paid 10 rands and 55 per day. So clearly it doesn't make sense for me to sell this currency pair. I lose money every single day overnight. Why would any investor buy the Japanese yen against the South African rand when you're losing money overnight? It doesn't make sense. This is why the initial trend has now started to reverse. And if you was to probably put the South African stock market on top of this currency pair, you'd probably see something very similar to show that they are very closely correlated. So how do we add on the SA40? Here we go. Okay, why is it not adding this symbol? SA40. Oh, here we go. Yep, so clearly when the South African stock market started to rise, that's when the Japanese yen South African rand exchange rate started to turn, because you can clearly see the money's going out of Japan back into South Africa, back into the stock markets. The South African rand's in higher demand. The investors can make money on the stock market going higher. They can also make a positive interest rate differential credit into their account over an annual 12 months of 3.64%. So clearly it's positive to buy this currency pair. It's not an attractive trade to sell this pair in the market. So clearly we can see the South African rand is getting bullish against the Japanese yen. Investors are going to chase this overnight carry trade because they're getting paid interest, plus they're going to get paid the capital appreciation of the currency pair. So if it goes up 12% and you make 3.64% interest, you're making 15% over an annual 12-month period, as long as the interest rate doesn't go down. As long as the currency pair exchange rate doesn't go down and it keeps going up, you're going to make a profit on the exchange rate going higher, plus the interest rate differential on top, which is 3.64%, which we can see here. So clearly it's attractive for us to buy this currency pair. It is not attractive for us to sell this pair, and the smart money will be going long this currency pair to get paid that interest rate differential and to catch the trend as it moves higher in the market. So there we go, traders. We have a really good trade opportunity right now. If you're going to be buying this currency pair, what we need to figure out is how much this currency pair it fluctuates by on a monthly basis. So if we look historically, it's 7.75%. What I just did. So 7.75%. So that's how far you'd want your stop loss to be, around 7.75%. And you can clearly see as well, when you get your pullbacks in price, it's around 7%. So this really does work when you use a 1 month volatility stop loss. So if you're going to buy now, there could be a stop loss area. We can go long this currency pair and aim at least for 10 on the exchange rate. So we want to get up to at least a price of 10. There we go, traders. So there we go. That's the South African rand against the Japanese yen. Let's see how this plays out, guys. And let's hope that we can get a good buy setup in this currency pair. Thank you.